Why doesn't the government like Bitcoin? Bitcoin, the pioneer cryptocurrency, has gained immense popularity and attention since its inception in 2009. However, its disruptive potential and decentralized nature have raised concerns among various governments around the world. This video dives into the multifaceted reasons behind government skepticism towards Bitcoin. Lack of central control. One of the fundamental principles of government is the maintenance of control over their respective economies and financial systems. Bitcoin's decentralized nature, powered by blockchain technology, circumvents traditional control mechanisms. Central banks have no authority over the issuance or regulation of Bitcoin, leading to potential risks in monetary policy management and financial stability. Unregulated and anonymity. Bitcoin transactions occur pseudonymously, allowing users to conduct transactions without revealing their identities. While this feature enhances privacy for legitimate users, it also creates opportunities for illicit activities such as money laundering, tax evasion, and illegal transactions. Governments are concerned that the anonymity associated with Bitcoin could facilitate criminal behavior and hinder law enforcement efforts. Consumer protection and fraud. The lack of regulation in the cryptocurrency space exposes investors to significant risks. Initial coin offerings, ICOs, and other investment opportunities related to cryptocurrencies often lack proper oversight, leading to fraudulent schemes. Governments are apprehensive about consumers falling victim to scams, Ponzi schemes, and unscrupulous practices that could harm their economies and erode public trust. 2. Volatility and financial stability. Bitcoin's notorious price volatility has been a point of concern for governments. Rapid price fluctuations could impact financial stability, especially when a significant portion of the population invests in or holds Bitcoin. Wild price swings can lead to financial losses for retail investors and disrupt macroeconomic stability, which is a critical focus for governments. 3. Tax evasion and revenue loss. Bitcoin's pseudonymous nature makes it challenging for tax authorities to track transactions and enforce taxation. Governments rely on tax revenues to fund public services and infrastructure projects. The widespread use of Bitcoin for transactions could potentially lead to substantial tax evasion, resulting in revenue loss and an uneven tax burden on citizens who do not utilize cryptocurrencies. 5. Challenge to monetary policy. Central banks control traditional currencies and implement monetary policies to manage inflation, interest rates, and economic growth. The rise of Bitcoin and other cryptocurrencies introduces a new form of money supply that operates independently of central banks. This could weaken the effectiveness of traditional monetary policies and create instability in financial markets. 6. Global regulatory disparities. The decentralized nature of cryptocurrencies presents a challenge for regulatory harmonization across countries. While some governments have embraced blockchain technology and cryptocurrencies, others have banned or heavily regulated their usage. This disparity can lead to regulatory arbitrage, where individuals and businesses move operations to jurisdictions with lax regulations, potentially undermining the effectiveness of regulations in any single country. 7. Cybersecurity concerns. The technology underpinning Bitcoin, blockchain, is touted for its security features. However, like any technology, it is not immune to vulnerabilities. A successful cyber attack on the blockchain or related infrastructure could have widespread economic and financial implications. Governments are wary of the potential systemic risks that a large-scale attack could pose to their economies. Threat to traditional financial institutions. Bitcoin and other cryptocurrencies offer an alternative to traditional financial systems, potentially bypassing intermediaries like banks and payment processors. This threatens the existing financial infrastructure that governments have relied upon for decades. The rise of cryptocurrencies challenges the status quo, leading to concerns about the potential disruption of traditional banking systems and the loss of control over monetary policy. Potential for capital flight. In countries with unstable economies or oppressive governments, citizens might turn to cryptocurrencies as a means to store and transfer wealth across borders. This could lead to capital flight, where funds are moved out of a country's economy and into cryptocurrencies, thereby affecting the stability of local financial systems. Governments are wary of this potential outflow of capital, which could weaken their economic sovereignty. What people think and how many use it. Governments often play a role in shaping public perception and fostering trust in financial systems. The decentralized and unregulated nature of cryptocurrencies might create confusion and mistrust among the general population. If people begin to question the stability and legitimacy of traditional financial systems, it could lead to a loss of confidence in government-backed currencies, further complicating economic management. Worries about world politics and safety. Cryptocurrencies have the potential to undermine a country's ability to implement economic sanctions and control cross-border financial transactions. Governments use sanctions as a tool to exert diplomatic pressure or combat illegal activities. The rise of cryptocurrencies could make it harder for governments to enforce these measures effectively, potentially weakening their influence in international relations. In conclusion, while Bitcoin holds the promise of financial inclusion, transparency, and innovation, government skepticism is rooted in valid concerns about its impact on traditional financial systems, monetary policy, consumer protection, and regulatory challenges. Achieving a balance between fostering innovation and addressing these concerns will likely shape the future of cryptocurrencies and their relationship with governments worldwide. As the cryptocurrency landscape evolves, policymakers will continue to grapple with these complex issues to ensure a stable and secure financial environment. Ultimately, an open and informed dialogue between the cryptocurrency community and government authorities is essential to chart a path forward that maximizes the benefits while mitigating the risks associated with cryptocurrencies. Do you think cryptocurrency should be regulated and taxed by the government? Feel free to share your thoughts in the comments section below. For more information on Bitcoin and crypto and all things cryptocurrency, please click the link in the description. If you like this video, please give it a thumbs up, comment, like and subscribe. Happy investing! Thanks for watching.